In this video, I'm going to show you the top 10 assets that everyone in their 20s and 30s should invest in. Hey there. My name is Derek, and if you're like most people, you're probably wondering what you should do with your money in order to secure your future. Well, I have good news for you. In this video, I'm going to show you the top 10 assets that everyone in their 20s and 30s should invest in. So sit back, relax, and let me show you how it's done. You may not have many options if you are in your 20s or 30s and want to have a nice retirement, as far away as it may seem, but one of the greatest is to invest early. A large amount of wealth is required to live a pleasant life. And, especially for the working class, one of the best ways to do this is to invest their money. If you invest early, you will be much wealthy. Consider the following scenario: you decide to invest $500 each month and receive an 8% return on your investment. If you invest at 25 and keep it until you're 60, you'll have $2.16 million in retirement. However, if you invest at 40 rather than 25, you will only have $341,000 in your account. Of course, this simplistic example isn't new and it's based on an investment generating an annual compounding rate of 8% without taking inflation into account. But this is nothing new, and I'm sure you've heard it before. However, for the vast majority of individuals, this is still the best method to increase their wealth and ensure that they have a comfortable reserve to spend in their golden years. By getting started early, you are putting yourself in a better position to succeed. We'll look at some of the most critical assets and financial decisions you can make while you're young in today's Practical Wisdom video. Let's get this party started, shall we? The investments I'll be discussing in this video are listed on the screen in no particular order. So let's get started with the first. Number 1. Mutual funds that invest in indexes. Before you turn 40, stocks are one of the best investments you can make. While they come with a high level of risk, they also come with some of the best rewards. You have plenty of time to make and learn from mistakes when you begin your investment path, but you should always make wise, measured investments. Based on the S&P 500 index as a benchmark, stocks have an average return rate of 10%. Few investments will yield such a high rate of return. Consider including bonds in your index fund portfolio as well. Bonds may provide the lowest return on investment, but they are the safest. You should aim for a weighted bond percentage of 10 to 20% in your portfolio. This increases the safety of your investment. You might also provide the percentage and change it based on your risk tolerance. Crypto index funds have recently been introduced. While they haven't been surveyed, they appear to be promising. The current return rates are between 10% and 15%, which is extremely high. However, when the rate of return rises, so does the danger. Index funds have a lot of advantages, one of which is that they have minimal costs. The higher the returns, the smaller the fees. Aside from diversity, another advantage of index funds is that many of them have cheap costs. You'll want to avoid investment fees as much as possible because they will soon lower your earnings. When purchasing index funds, be sure to consider the tax implications. Number 2. The real estate industry. With real estate, you almost never go wrong. For a variety of reasons, real estate is one of the best investments. To begin with, there is virtually always a housing shortage, and real estate assets almost always increase in value. Buying your own house is the first step in real estate investing. Mortgage payments are lower than rent when you own your home. You can look into developing other commercial properties once you own your home. Multi-unit residences, townhouses, workplaces, and other assets could be included. There are other choices accessible if you cannot take part directly in the real estate market. You can invest as little as $500 on several crowd fundraising services. The money would then be pooled with the contributions of other investors and invested in real estate projects. REITs are the name for these types of investments, real estate investment trusts. Number 3. Education. According to education statistics, the greatest time to study is in your 20s. According to research, learning new things is easiest in your 20s and early 30s. As a result, now might be the greatest time to earn that extra degree. Education is crucial since it can help you succeed in your work. However, you realize that not all education or learning is beneficial. Keep in mind that certain learning can be classified as a hobby and so cannot be commercialized. Start by looking at careers that you are familiar with and that can lead to success if you wish to invest in school. This could also be a good time to brush up on your financial knowledge. Number 4. A new business. Invest in a startup company while you're still young. Why? The possibilities are endless with starting a business. You'll be able to make as much money as you want, with a limitless return on investment. A startup firm is another investment you should make in your 20s. The potential for a massive return on investment is amazing. Even if your company isn't the next Amazon, investing in a business while you're still young can pay off handsomely. You don't have to build your own company, you can invest in other people's companies for equity in their company. You could, for example, be an angel investor, which is a fantastic alternative if you know the entrepreneur. Your investment may take the form of a convertible note, which means it has the potential to convert into a loan if certain criteria are met. Another option is to use crowd fundraising. There are several crowd financing sites with fantastic startups with a lot of potential. Before investing in a firm, make sure you learn everything you can about the founder and the company's history. Choose companies with an interesting storyline and entrepreneurs who have a background in business, whether through school, experience, or training. Working with a venture capital fund is another option. You can start as an accredited investor and work your way up to venture capitalist. However, some funds have strict investment requirements and a minimum investment amount. Number 5. Treasury bills. Treasury bills are essential assets for all investors, regardless of their age. When you're young, there's no better moment to buy Treasury bills regularly. Treasury bills are short-term government-guaranteed debt instruments used to fund government spending and keep the money supply under control. There are 3 tenors for Treasury bills: 90 days, 182 days, and 364 days. Tuition, rent, and even professional tests are all expenditures that must be paid. You can easily invest your cash in Treasury bills and pay them out when the bills are due. This is part of the asset and liability matching finance idea, which entails purchasing an asset to fund the payment of a future liability. Unlike other investing options, Treasury bills are completely risk-free, therefore your profits are assured. The returns are rather good, so why not invest in them? Number 6. Stocks with a high growth rate and a high dividend yield. We've made it obvious that being in your 20s and 30s is an excellent time to take risks, because you still have time to recover if you lose your money. As a result, investing in stocks is a great way to put some of your money into a high-risk, high-reward business. Simply put, growth stocks are those that are predicted to increase at a faster rate than the sector average. These stocks have a higher level of long-term positive cash flow and revenue generation than their counterparts. Dividend stocks are often those of financially secure and mature corporations, implying that their stock values are less volatile than growth stocks. Dividend equities should be part of your portfolio from the start. They provide potential to earn a regular income over a long period, assuming that the firms continue to operate successfully. Number 7. Exchange-traded funds, ETFs. Let's look at exchange-traded funds, ETFs, which are comparable to the index funds we discussed earlier. EFTs are similar to index funds in that they are baskets of securities comprising multiple assets, such as stocks, bonds, and gold. Investors can purchase and sell shares on an exchange, just as they can with stocks. Their adaptability makes them ideal tools for investing in a large market indices like the S&P 500, as well as specific sectors and subsectors like social media and robotics. The Schwab US Large Cap ETF, Global X Robotics and Artificial Intelligence ETF, and iShares Global Clean Energy ETF are all instances of EFTs. Number 8. Commodities. A commodity is an economic good, usually a resource, with full or substantial fungibility, meaning that the market accepts instances of the product as comparable or nearly so regardless of who produced them. This can be done in a variety of ways. The first is to buy a variety of physical raw commodities, such as precious metal bullion, in various amounts. Investors can also buy futures contracts or exchange-traded products, ETPs, that track a specific commodity index. These are high-risk, high-complex investments that are usually only recommended for experienced investors. Mutual funds that invest in commodity-related businesses are another option to get exposure to commodities. An oil and gas fund, for example, might invest in equities from companies involved in energy exploration, refining, storage, and distribution. The benefits of commodity investing include portfolio diversity, potential returns, and a potential inflation hedge. Commodities have consistently outperformed other investments during periods of high inflation, making them one of the greatest assets to possess. Number 9. Annuities. An annuity is a contract between you and an insurance company in which the company agrees to pay you regular payments, either immediately or at a later date. An annuity can be purchased with a single payment or a series of payments known as premiums. Some annuity arrangements allow you to set aside money for retirement. Others may convert your money into a retirement income stream. Others do both. You have a deferred annuity if you use an annuity as a savings vehicle and the insurance company defers your payout to the future. You have an immediate annuity if you use the annuity to provide a source of retirement income and your payments begin straight away. Fixed and variable annuities are the two most frequent types of annuities. An indexed annuity, also known as an equity indexed annuity or a fixed index annuity, is a type of hybrid. Investors commonly consider annuities when making retirement plans, so it's important to know what they're all about. They're also frequently touted as tax-advantaged savings vehicles. Surrender costs, mortality and expense risk charges, and administration fees are among the fees and expenses associated with annuities. Commissions on annuities can be rather substantial, reaching 7% or more. Number 10. Initial coin offerings, ICOs, and cryptocurrencies. Cryptocurrencies and initial coin offerings, ICOs, have only recently piqued the curiosity of traditional Main Street investors. These quickly shifting marketplaces, however, are enticing for investors, with billions of dollars generated in ICO financings and over 1,000 different cryptocurrencies already accessible. Most ordinary investors find it difficult to understand these complicated investment products and estimate their risk levels. We know, however, that they have astronomically high returns. The returns might be anywhere from 12% to 200%. Some initial coin offerings, ICOs, have done exceptionally well. The OTA, for example, received a 13,000-fold return on investment. If you had invested $1 when it was first offered, you would have made $13,000. Well guys, there you have it. If you haven't liked our page yet, what are you waiting for? We have amazing content that will help you grow and build your life, so check our other videos out. With that said, have a great day. And see you in the next one. Thanks for watching, share your thoughts, like the video, and subscribe for notifications on new content.